Michael Carnevale is grant manager and financial advisor. Securities offered through Raymond James Financial Services Incorporated, 400 Southbridge Street in Auburn, Massachusetts, 1-800-657-9126. A member of FINRA SIPC and are not deposits, not insured by FDIC or any governmental agency, not guaranteed by Webster 5 Cent Savings Bank, and subject to risk, may lose value. Webster 5 Cent Savings Bank is not affiliated with Raymond James Financial Services Incorporated. The information contained in this report does not purport to be a complete description of the securities markets or developments referred to in the material. The information has been obtained from sources considered to be reliable, but we do not guarantee that the foregoing material is accurate or complete. Any information is not a complete summary or statement of all available data necessary for making an investment decision and does not constitute a recommendation. Any opinions are those of Michael Carnevale and not necessarily those of RJFS or Raymond James. Expressions of opinion are as of this date and are subject to change without notice.
Good afternoon, ladies and gentlemen. This is Richard Morkel, and today we have, as usual, Mike Carnevale on Conversations With, and he is going to tell us where the world is headed. But I have a big question for him first. What do you think about Bitcoin?
Crossed 100,000 today. Closed at 100. Oh, well, it didn't close, but it did cross 100,000 for the first time.
I do not believe this is real. It's just little bits and bytes in some computer. I don't understand it. But somebody will give you $100,000 if you give them a Bitcoin. That says something about reality.
Yep, I don't understand it at all myself. Still really an unregulated investment, so a lot of the...
You're only for regulated investments?
Well, we can only do stuff that is, regulated by the SEC, so... And, doesn't mean it's all a good investment or all a bad investment. It's more about firms protecting themselves because unregulated securities, if they go wrong...
Well, can you tell somebody something that is regulated? It's like companies have ETFs now in cyber.
Yeah. Most firms still will not allow that too.
Would they let you, if somebody came in and said, I want to put $1,000 on Acme Bitcoin ETF, you wouldn't sell it?
We couldn't.
Think you might in the future? Or?
I think, as with everything, I think as soon as it gets approved by, the SEC, I think then every firm will participate in it. But until then, from the firm side, it's unlimited liability. Because if you're then selling essentially an unregistered security, so to speak, without going into all the technicalities of that, but if you allow someone to do that and it goes down 90%, there's probably an attorney somewhere in the country who's going to say, wait a minute, didn't you know that was not a registered security? It's illegal to sell unregistered securities, and your liability would be...
So let me get this right. Just as an opening, trying to play devil's advocate. So if a regulated security goes down the tubes because of horrible, irregular mismanagement, you're covered.
More than likely, yes.
More than likely.
Enron's a good example of that.
Enron is a good example
of that.
So the question then is, should one fear Bitcoin? Should one say, Mike Carnevale, I'm coming in and I love your business, but I'm feeling Bitcoin. You think that that's really dangerous. I mean, I know it from a regular, you can be sued, so
Right.
you won't get in for, but as opposed to all the securities that go belly up in this world, do you think that's dangerous?
No.
No.
I don't think there's any difference between either one of those.
Okay.
It's just that from the legal standpoint, one is regulated, one is not.
Okay.
In other words, we won't let you, the industry I'm talking about, they won't let you lose money in a unregistered security, but we'll let you lose all your money on a registered security.
So,
It's all about protecting
so we are
the
hearing
firm.
from Mike Carnevale, the croupier at a local casino.
Oh, I've had this discussion too with compliance people too, where you'll get the thing. Do you realize this, and this? And I would come back and say, I came back once and said, so let me get this straight. The individual's made a ton of money investing in one security. You don't like that. But it's okay if we put him in 10 different securities and he loses all his money. And in a closet, the answer is yes, because one we're protected, the other we're not protected. That's always diversified. He's got 10 different securities. They all went out of business. Well, diversified, you did your job.
You would say, generally speaking, diversification
Is good.
is better than betting it
Correct.
all on.
But it's no guarantee of success.
But you can. Well, Mike will be taking tours to MGM in Springfield next weekend, and he won't be telling you what to bet, but he'll be telling you what you can bet on, and giving
You'd want to diversify, if you're into slots, you want to diversify across many different slots, not just stick at one all day. But no, that's really, that's what the world's all about, right? It's about managing liability. And in one case, you're fully covered. The other case, you're fully exposed.
And that is what civilization is until it goes over the edge.
Absolutely.
I agree.
Absolutely. Absolutely.
As I mentioned on the other program, you're lucky to be seeing me today.
Okay.
Because I had a sure bet and I didn't take it. I knew that I should take all the family's money, sell everything, and put it into one bet. I didn't check it out at the prediction markets, but I knew it was a winner, and I would be phoning this in for my villa in Provence,
Oh, really? Okay.
but I didn't do it.
And what was that?
I knew, we all knew, everybody knew, Joe was going to pardon Hunter, and I didn't bet on that.
Okay, yeah.
It was I had the chance to wallow in money, and I blew it. I'm never going to get this chance again.
I hear you. Well, you might.
Well, you call me when you know the next sure thing.
Okay.
All right. So, back to reality, semi-reality.
Yes.
All right. We are in November. We were in November,
Right.
and it wasn't a bad month.
No, it was a great month. The Dow went up 7.5% in a month. Yep. 7 all-time closing highs. There's only about 20 trading days in a month, so 7 of them were all-time highs.
Huh?
Crossed 44,000 on the Dow for the first time, and the index gained almost 3,000 points. Not 300, 3,000 points in the month of November. Pretty good.
Ladies and gentlemen, if you can't see that smile on that face, you are blind.
This on the backdrop of all the things people have been worried about, not only this year, but last year and 2022 and post-COVID and all that, right? No, we can't do this, that, or the other. had you just followed the numbers, the technical stuff, it wouldn't have scared you out. It would have kept you in. And boy, people who have stayed the course. It's been pretty good.
Well, I think for a lot of people, like staying the course, is keeping their money in the index fund, in the retirement index fund.
Yeah.
Where else are they going to go?
Well,
MGM?
no, but a lot of them have gone to CDs, getting 5%. They're going to money market that's maybe 4.5%, 5%, and
There is always the possibility that you stay in and the market has a 20-point drop.
sure.
We're all devoutly not hoping that happens.
Right.
But
But if you've been in there for the long haul, and let's say it dropped, it's for easy math, it's 45,000 today, and it drops 20%. So you've lost 9,000. You're still at 36,000.
I agree. I mean, I do remember that the Dow was at in the mid 80s, some point in the mid 80s, early 80s maybe, was at 3,000.
Funny you mention that. I remember, and I forget where the Dow was at the time, but there was an analyst, Harry Dent, who wrote a paper titled Dow 3000, and people thought he was nuts.
Yeah.
What do you mean 3,000 on the Dow? I forget where the Dow was at the time. It was probably around 1,000 or 1,200 or something. 3,000? Yeah.
And if you probably don't, but somebody isn't that educated like me, always scratch at 3,000 to 44,000. How the hell did that? I have to say inflation is explained. You say half.
Yes, half of it is inflation.
If the Dow started out 1983 or so, 85 at 3 or 86 or whatever it was when it went to 3. If it started out instead at 25 and went to 44,000, I wouldn't be as adamant that I think it's just preponderantly inflation, responding to inflation. I would say, yeah, there's other stuff. You're saying it's just better business, better companies doing better stuff?
Yeah, I mean, inflation historically is around 4%. The Dow historically averages around 8 or so. So that's half the gain. That's how I come to that conclusion. I mean, that half the gain
and you're
is
doing
inflation.
a heavy bit of compounding. In it,
Right,
sort.
of course. Yeah. I mean, the gap is getting bigger between people who have participated in all of this and who got chased out. And I don't see how that gap can shrink again. I think it's you talk about the end of society or something. I think that's how it will end. In other words, the gap is just going to get bigger and bigger and bigger until
The pitchforks come and
yeah.
we find poor Mike in the give us a call quickly. We'll get you out.
Yeah,
Well, everything goes well until it doesn't.
correct.
And for those of the world who have their savings, yeah, it's not bad. It's not bad. But the fact that people can't buy, and they're saying it might be just a spike. Maybe the Trump administration settles things down. Maybe it doesn't.
Time will tell.
Yeah, and we have a plateau, and plateaus ain't bad.
Yep.
But you said that gap. A number of years ago, I remember. I don't know if you've ever heard of Barbara Anderson, Citizens for Limited.
Yeah.
she was trying. She lived in a cheat town in the North Shore, and they were trying to get everybody to raise taxes. And somebody said, "It really hurts us." And somebody snidely said, "Well, if you could manage your portfolio better, you wouldn't be saying that." So that person is lucky they were in, I don't know, Rockport, Newburyport, one of those
Right.
ports.
Right.
Because otherwise, if they did it in, say, Charlton at the town meeting, they get stabbed. But moving right along here, let's talk some technicals.
Well, obviously, if the Dow goes up 7.5% in a month, that's not normal. Gaining 3,000 points in a month is not normal. So you expect the technical indicators to have really weakened, and they have. You know, moving average has gone to 72% versus 64. Volatility is at record lows. That's a big negative. It means there's not a lot of people really worried. The stochastic oscillator, which takes into account high and low points on a stock or index over a certain period of time, is at its worst, near its worst possible reading. It could be 100 is the worst possible reading. A month ago it was 83. Today it's 91. So that's a sign that, you know.
My doctor has a stochastic oscillator in his office.
It really? Okay. Well, you can get one for yourself. I see it advertised for $99. You put your fingers like that.
Yeah.
And it tests you three things, three important things, because you have to have those going for you. Well, these indicators don't matter.
Well, first thing is, will you get suckered on a $99 piece?
Correct. Oh, it's medical grade, whatever that means. You know. You know. I mean, and then the fear and greed index. We're back to the greed category, and all that stuff. When are people greedy? Well, when they're making so much money in the market, right? They want to make more. When are people less fearful? Oh, when price of stocks are going up, and we're at that level right now. Counter that with the month of December, which historically is the second best month. So, not to get ahead of ourselves, but the downturn in the market that people think is going to happen may be postponed for a couple of months.
You think that even though there's just no fear and greed out there?
Yeah, that's a negative.
Yeah.
I would, if I had to pick a time when I think the market will go down or have a rest, I think it'll be shortly after the inauguration.
Okay, so that's early January. Well, that's
January 20th.
Late January.
If I had to pick a time where this will top out temporarily, I would think that would be a
Okay,
time.
so here's somebody that I think people in the market are anticipating. That, you know, Trump is going to do something. So you think, what are they going to say? Uh-oh, Trump's here, time to get out?
No, I think it's like, you know, there's a segment that's excited about the change in government and whatnot. And, you know, usually the anticipation is usually more powerful than the reality, I think. And
That's
so I
what
think,
Carly Simon said.
okay, it's true. It's true. And you don't want me to start singing, so I'll refrain from that.
I have nothing to say. Other than
Okay. But I'm so vain, I won't.
Well, you know, she called me up and said she's going to write another song about me.
Oh, really?
Yeah.
Okay. Well, you're of similar age. That's a, you know, I think there'll be great anticipation of a change, and then once it's here, the excitement will die off, and that might cause the market to sink a little bit.
I understand that people are just getting overexcited in a way. But, you know, you would think that well, not seasoned investors, but who's doing this? Because flinty-eyed investors probably wouldn't get swept away. They would say, they would look at the odds of things happening and wouldn't go crazy. Who's going crazy then?
Well, that's what these indicators, which are retail type indicators.
I understand. Who are they that would?
Well, they're people like us. People who are invested in the stock market, individuals who are invested in the...
Well, do they do something new, different? Did they do something different? Because I haven't done anything.
Right, but the group as a whole has been big buyers.
Who are these people?
They're people like us. Just
No,
not,
we just don't. They weren't
but
like
not,
me.
but not us. But other individual investors. And a lot of this is driven by 401ks and 403bs, retirement accounts that are forced to invest.
Well,
right?
yeah, everybody.
And a lot of it is going into indexes, which then force you to keep buying and buying.
do they just yank them out the day after the inauguration?
No, I mean,
What happened? I'm not understanding.
it will be
I'm too slow.
it will be less of a buying demand.
Okay, so all right. So you're saying that a lessening of the buying demand
Right.
drives prices down.
Can drive prices down.
So the company still is just as good.
Yeah, it has no effect on whether the company's doing good or bad. You see it every day. A company misses earnings by 2% and the stock is down 15%. Why did the company lose 15%?
Yeah, but that could happen right this week.
It could. Oh, yeah.
That's.
Yeah.
I'm still. I'm not saying you're wrong. I'm not.
No, I hear you.
But and I understand there's enthusiasm for Trump, but there's also the opposite against him.
Correct. But
So one would think that why aren't those people selling now? Because it's the end of the world with the Trumpster in. Why they're not going to. Those people aren't going to sell out on January 22nd.
no. I'm just saying that if the market is to go down a bit, that would be a logical time for it to go down. In other words, now we no longer have the anticipation, we have the reality of...
On the first day.
Not necessarily the first day, but
the first week or so.
around that time period.
Okay. I'm not disagreeing with you. I think you're probably, I think that's the way people are not necessarily rational. So I would think there's a lot of that. But you have said there were people when Trump got out of office who sold all their stuff.
Right.
If anything, they'd be hyping up the buying ongoing.
They are.
You don't think it will? You think it will stop on?
I think it will level off, and I do think it would go down. I wouldn't be surprised if the market dropped 5,000 points sometime after the inauguration. It wouldn't surprise me.
Well, that wouldn't be too big a
No,
shock.
no,
Because
that's what I'm saying.
It was to wrap it
Yeah.
up.
Right.
It was the Bitcoin rally.
Well,
I'm not saying that.
No, but
I take that.
I think it's, and so if you think that could happen, right? Well, then you don't get shaken out by that because it's kind of what
Okay, yeah.
looks like it could happen. I mean, if I had to say, that's what I think will happen.
I think you need to write at least a small booklet for your people, and because these are I'm sure other people are saying that too, but it's not it's worth writing about.
No,
But you won't,
no,
because
nobody would buy it and no one would listen anyways.
I'd like to say I'd buy it.
No,
But maybe I wouldn't. But I just like to say it. No, but I think it would be somebody writing it would be a useful primer.
well, I think the biggest obstacle in investing, right, for people is emotions. 4 years ago, I got a good example here that came to light like toward the tail end of November. A person, when Biden got elected 4 years ago, a person called and said, "This guy's nuts. I want to sell everything."
They were right. He was nuts.
And go
yeah.
to right, but
Yeah.
again, that's emotions.
That's emotion.
And said, "Yeah, what can we do this?" I said, "Well, you look at CDs, money market." Yeah, okay, that'd be what we do. 4 years later, the call comes, and it wasn't a 4-year interval, but 4 years after that, I get the call from the person, and yeah, hello, how are you? Good, we're pretty good. Hey, I want to get together with you. I think it's time to get back into the market now. With Trump, he's going to do this, that, or the other thing. I said, yeah, we can get together and we can meet and at least talk about it. And I said to myself, you realize the Dow is at all-time highs now, and you want to get in. And the gist of it was, I looked back at what was sold and where it is now. The person could have bought another house. Now, not $1 million house, but the person could have bought a $450,000 house with the gains. And I didn't want to say that. So I said, well, you do know, we can't recover the previous gains, right? And so maybe now, instead of getting back in because Donald Trump is back in as president, maybe that's not the right thing to do. Maybe get in a little bit. See what happens 6 months and get in a little more. Rather than dump it all back in when it's at an all-time high. Doesn't mean it can't go higher, but it's at an all-time high. You're paying the highest price you could possibly pay. Couple that with what history shows about stock market returns, may not be a great time to dump all your money in.
Well,
and that's all emotions.
It is.
That's, well, you don't understand. Millions and millions are coming across the border. Doesn't matter. Don't worry about it. Well, this. If it really was something to worry about, people who have more money than us would be selling, not buying, and the market wouldn't be going up. It's emotions, Got to get rid of emotions. You can't get excited one way or the other.
You're waxing poetic, but we've got to move on. Stop the emotions here, Guy.
Okay.
All right, we are, we've got the technos now.
Yep.
We're talking about Dems up. A best outcome is Dem president, Republican Congress. That ain't happening.
Right. No. What we have now, of course, is one party controlling all three.
We call them, we call the branches of government in this country.
So that's the worst possible, historically, that's the worst possible outcome. Historically, that produces about a 5% annual gain. When you have the Democrats controlling everything, when you have the Republicans controlling everything, it's about a 7% gain. When you have the Democrats control everything, it's about a 9% gain. But when you have it divided, its average is 16%. So we have something going against us now.
Okay.
Just keep that in mind.
Okay. That's a technical indicator, I guess.
It is.
Anyway, they cut the federal rate, was cut it by 25 points, basis points.
Yep.
Powell said he won't quit. I didn't
Right.
know. Oh.
Yeah, he said, they asked him at the press conference, if President Trump asked you to resign, would you? He said no. And he says he can't fire me anyways because Congress would be the one who'd have to do that.
Yeah, probably wouldn't And
His
you know,
term ends in 2026 anyways.
and he's kind of always just sort of been the guy who's done what he had to do when he had to do it, but not really, he avoided doing a lot of things.
Right, right. A lot of central banks cut rates. Nobody raised them. Oil's under $70 a barrel.
Yeah, I like that.
Yeah.
It's actually it's mid-60s, isn't it?
It
I
is,
haven't
yeah.
looked lately.
Yep, yep.
Argentina,
Argentina cut,
it cut 35 points
no, they cut their rate to 35%.
to 35%.
But their inflation is still at 209, so.
But that's still a cut, big cut for them.
It is.
Bank of England, Mexico, New Zealand, Peru, South Korea,
Yeah,
they cut.
yep.
Turkey,
Nothing.
they're just invading Syria.
I guess so.
Yeah. Okay. Oil, and we talked about that.
Yep.
Drilling and rigs, 585.
Yeah, so there's less drilling, but production's at an all-time high.
Okay, great. Casey lost. Miami's only undefeated teams.
Well, we like to throw in something on the
Yeah.
sports side, and
We like science.
yes, the line of this month is no perfect season, and so the Bills defeated Kansas City. Kansas City was the last undefeated team this year, and so the only other undefeated team in history was the 1972 Miami Dolphins, and then the following year, the Dow fell 17%, and then dropped another 28% in '74. Bottoming out at 570 on the Dow. So you don't want to see an undefeated NFL team. And Kansas City was on its way to doing that, but no longer. So that's good news.
Great. All right, our inflation.
It's gone up a
It's
bit.
gone up a bit. Core, less food and energy. The one the Fed looks at was up 0.3% for the month. Was that for the month?
0.3% for the month. Right.
Which comes to about what, 3.6?
3.3 for the year.
3.3 for the year. Okay,
For the past 12 months.
very good. Not very good, but
No.
October producer prices up 0.2, 2.4 past year versus 1.9 in August. What do you take? You think we're not in a good inflation spot, inflation market?
Well, all this talk of tariffs and stuff, some economists say that that will cause inflation to increase. It's already starting to increase, so that could be a problem. Whether this tariff talk is just talk and nothing else, most likely it is. But, if you're going to put these big tariffs on, these companies are just going to pass the costs on to us, consumers, and that's going to cause inflation to accelerate again.
Well, Mike, I have to apologize to you because I didn't direct things in the proper way.
Is that right?
So we still had other things to take care of. It was good to see that you brought your clipboard this month and looked professional.
I did.
And so we're going to hope he can hold the line and do that next month as well.
I will make a note of that.
Thank you, Mike Carnevale. This is Richard Morco saying au revoir till next year.